What up everybody, welcome back to Royal Blu FX. In today's video we're going to talk about how to trade liquidity correctly in the forex market. There's a lot of misconception out there about how to trade liquidity and we're here to clear it up. So stay tuned. Also, if you haven't already, I would really appreciate if you guys throw a huge thumbs up on this video. Obviously, once you see the whole video, and please subscribe to our channel and share this video with your fellow friends out there. So without any further ado, let's begin. All right, so first things first, I think a lot of you guys know how to identify liquidity, but for the rest of the viewers that don't know how to identify liquidity, I'm going to break it down here in this video kind of fairly quick, and then we can jump into how to trade liquidity correctly in the forex market, okay? So there's 4 ways to identify liquidity in the forex market. First things first, okay? There's what's called trend structure. Prices are going bullish, prices are going bearish. At this point in time, when prices are going bullish, you can see that there's buyers buying here, right? And you can see that there's sellers, there's also sellers selling in the market right here, okay? So at each high and each low, there's buying and selling happening, okay? And when there's buying and selling happening, there is what's called a liquidity in the market. Okay, there's and the reason why there's liquidity in the market like this is because there's what's called stop losses. Okay, stop losses essentially are liquidity in the market. Liquidity is essentially just money in the market. That's all it is. Okay, so there's a bunch of money sitting below and above these highs and lows over here. Okay, same thing goes for the bearish side, right? When there's traders selling, there's a lot of liquidity at the highs over here. When buyers are buying, right, they're buying right over here at these lows and each highs. Okay, so when prices are going bullish like this, we expect for prices to be taken out like this. We're expecting for the liquidity to be taken. Okay, this is liquidity to be targeting. Okay, and same thing goes for the bear side. When liquidity is going bearish here, when prices are going bearish here, we're expecting for this liquidity to be taken. Okay, so and you'd be wondering, well, why? Okay, then if there's liquidity at the lows, why isn't this low here pushing all the way bearish here to take out this low? Very good question. So when prices are bullish like this, okay, the market is doing what it's doing. It's breaking and mitigating, breaking and mitigating, breaking and mitigating. And what they're doing is they're mitigating the last down position down here, right? The very last position, the very last low candle, the last candle in the market, right? They're mitigating that because they're continuing price up. Once all this liquidity has been built in the market, okay, banks will then eventually come down and start pushing bearish structure like this, right? And then now wiping out all this liquidity, this liquidity, all these lows, higher lows in the market like this, okay? And now the banks are taking up all this liquidity for this move to push bullish like this, right? In order to go continue bearish. Now I don't want to get off track too far from here, but so we'll continue with the next one, okay? All right, this one's called the double bottoms, double tops. You guys probably know about this one, obviously. This one's like the most famous one for a lot of traders. This is a very big one because we see a lot of sort of patterns happening here where the banks typically go for these ones. These ones are like the biggest ones. And these ones are the most common ones because they happen all the time in the market. So everyone, as a retail trader, was taught to buy and sell from double bottoms, double tops. So what happens when there's a sell-off pressure happening here? Prices then come back. A lot of retail traders say, hey, okay, we see there's a potential double bottom forming, double top forming. Therefore, we're going to start selling off, right? So essentially what's happening over here is a lot of liquidity is being placed right just above these two double tops, and then the liquidity, then the markets, essentially the banks, go after it and take it out, right? So what we would expect is for prices to push bullish like this, whether prices are bullish or bearish. In this case, prices are essentially, the double tops are essentially liquidity for the grab, right? For prices to come back down, break a new low, and then prices to push bullish again to continue bearish like this, okay? Again, something goes for the bullish part of this, okay? When prices are essentially going bullish, prices will take liquidity like this, sweep the lows, and then push bullish like this to reverse the market pushing bullish, right? So we can all anticipate for the markets to come back to these areas for prices to take out liquidity. Okay, now these ones called relative equal structure. Now the reason for that is because there's liquidity that is formed here. Okay, you can see that when we're pushing bullish, there is liquidity forming like this. This is a very enticing move for the banks as well, for the banks to come and take out these lows here. Same thing goes for these highs as well. Now, are they going to happen whenever we're expecting? Whenever we see these equal, relative equal structures? Are they going to happen all the time, right? No, because we can't control what the banks are going after, right? We can see the liquidity on higher time frame structure, and then we can start anticipating where the banks are potentially going based off the higher time frame structure, and then we can play the internal liquidity, which is our lower time frame structure liquidity, like so, like here, for example, right? We can start anticipating what prices will do, right? If prices form something like this and we have an order block right below, we can anticipate that there's liquidity forming right here. We can see it. There's an order block right below, and then we can wait for prices to continue bullish like this after prices have taken that liquidity, right? But I'll show you that more in detail on the live chart example, okay? So the last one, the fourth one is here, is the consolidation. You can see that we have, a huge consolidation area happening here, right, from the highs and the lows like this. This is very attractive to the banks as well, because essentially this is like the dead pool. Okay, this is where everyone gets slaughtered, like sheep in here. Okay, there's liquidities from highs and the lows here, all around. Okay, and what the banks are doing here is they're building up all this liquidity pool for the next big move that the banks will go after. Okay, they're going to use all this money, whether it's the sell side or the buy side liquidity, and then they're going to use all that money to push prices either bullish or bearish from here, right? We can only do what we can do as traders, just waiting to anticipate for the markets to break out of this area, right? If prices are going bullish, right now we understand that the buy side liquidity was taken. We can wait for potential for prices to potentially retrace back here to the demand area, and then look for another bullish move like this. Okay, so anything can really happen just as long as you identify the liquidity. Okay, somebody told me this very all the way back when I was learning how to trade, right, was that if you don't know where liquidity is, you are essentially the liquidity in the market. Okay, if you don't know where liquidity is and if you can't see it, you are the liquidity. Okay, all right, so here's a relatively real look at what liquidity looks like in the markets. Okay, so as you can see over here, when prices are bullish here, right, everything's bullish that you see. This whole structure formation here is bullish. All right, so we can see that there's breaks of structures happening here, right? And once prices have gone bullish, what we anticipate as traders is to wait for prices to come to retrace back to the area of demand, right? Now, at this whole point in time, right, you can see here there's an area where liquidity is being formed, right? So as a trader, whenever we're looking to trade, we don't look to take every low and every high like this, right? Even though you can see that there were buyers here, there were buyers here, right? Essentially, this is our double bottom formation, liquidity formation, right? You can see that there's a lot of people that a lot of the retail traders that were looking to trade this buy from an anonymous area, right? They have their own indicators or whatever, and they're buying from an anonymous area that we smart money concept traders don't see that as an actual legit area to buy from, right? But as you can see over here, right, there are buyers that were buying here and they're looking to take prices up, right? And then unlike the behavior of the market, right, when there is liquidity forming, we wait for that liquidity to be taken out like this. Okay, so what we anticipate as traders, first and foremost, is to wait for the markets to come and take out that liquidity, and then we can trade away from liquidity. Okay, make sure you understand that whenever there's a break of structure like so here, we anticipate for the markets to come out and take out that liquidity first. Okay, because what that will do is liquidity is essentially the way, well, it's essentially the way the money, the markets move. Okay, liquidity is just more power for the banks to take that next move to push prices up. Okay, liquidity moves the markets. Okay, so over here, what do we see here? We see a double bottom. The markets have come back, right? We anticipated as traders that this is where prices are going to come back now. We see that there's a bunch of liquidity. The liquidity was taken, and now we can start seeing prices pushing higher. Why? Because the banks did their jobs already by taking out that internal liquidity. Okay, there's what's called internal liquidity and external liquidity, which we'll probably talk about another video from now on, probably in a week from now. But essentially, this is the internal liquidity that prices need to be taken, all right, or the markets need to take. And now we can use the power of all this liquidity to then push prices bullish. Okay, we want to trade away from liquidity, not towards liquidity, but away from liquidity. Notice how when prices have retraced, we're trying to trade away from it. Okay, because essentially, right, we can't predict. Like you can see at the tops over here, at the very top here, that there's double bottoms or triple tops, excuse me, or triple tops or double tops or whatever, right? You can see that there's liquidity shaping right above, right over here, right? We as traders cannot anticipate that prices should go towards liquidity, right? We can't target liquidity. Even though that we know that markets go after liquidity, we can't specifically target liquidity because that's not our rules. Our rules as traders was we should always wait and anticipate for a break of structure first, okay? When a break of structure happens, that tells us initially that there is somewhat of a guarantee that prices should continue rising, okay? That's all that break of structure confirms. Now the next confirmation is really just waiting for liquidity to be building. Once that liquidity is building, we can now anticipate for prices to retrace, right? Take out that liquidity, use this liquidity as the next power move to push prices up, okay? Because we all know at the end of the day that liquidity moves the markets, okay? Banks move the markets with all the money that they're taking out, okay? So once that happens, we can wait for our chalk right over here, right, at the area of demand, and then look to push upwards, right? And in return, take out that sell side liquidity from the highs, okay? So what do you know when prices are pushing bullish like this? Prices are breaking above, taking out that external liquidity like this, and using this external liquidity now to push prices bearish, right? Hey, what a coincidence, right? So this is how the markets, this is how the bank and or liquidity complements each move, right? It complements each move by taking out the internal liquidity, mitigating, pushing price bullish, then taking out that external liquidity, then essentially we would anticipate as traders for prices to move bearish like this, right? Because now it just took out all this liquidity. So essentially this liquidity over here is complementing this move, this bearish move, this bearish retracement, right? Then we can wait for prices to do the same thing, create liquidity like this. You can see that there's that structure right here, the fairly looking double bottoms right over here, right? And then you can wait for prices to come and mitigate another order block like this, for prices to push bullish like this, right? So it's just happening over and over and over again, right? Remember, if you can't see liquidity, then you are the liquidity in the markets, okay? Now, let's talk about some of the other formations, right? Obviously, you can see this is the clear double bottom. We can also see this formation as well. Let's push down here, okay? You can see that structure is pushing bearish like this, okay? So something like this, when prices are retracing like this, you can see that there's lows and highs in the market, right? What did I mention when prices are pushing bearish in this case, right? What did I mention a few minutes ago? Is that when prices are pushing bearish, essentially each low and each high are liquidity in the markets, right? So what do you see happening here, right? When prices are extending or retracing back to this major move, we can see that the low side here, the lower lows here, are being taken out. Why? Because there was areas, these are areas where buyers have bought and have placed their stop losses at the low. When prices are extending here, there are essentially, there's sellers here with stop losses right just above here, right? When sellers are selling here, because it now just mitigated this order block here, there's more liquidity sitting at the highs, right? Prices are pushing bearish, breaking a new low, right? Now we can anticipate for price to retrace back. They just did their job taking out that liquidity and came in back and mitigated this area and or using this area as inducement, which we'll talk about in another video here, right? Mitigating this last order block, pushing prices down, right? Essentially taking more liquidity from this inducement. In inducements, there's also liquidity, which we'll talk about in another video. Once prices have extended down to this downside here, you can see there's another on the buy side over here. When buyers have bought, there was more liquidity sitting here. Now the banks have done their job and pushed prices even higher, right? So this is just another formation that we can see in the markets. What else can we see? We can also see that this liquidity formation here, this other one, and it's like this. Okay, sorry for my crappy looking tool drawings here. Here we go. Let's do this. Okay, what does this indicate, right? It's liquidity. It's our, it's our fairly looking double bottom looking liquidity right over here, right? Forming like this. It's internal liquidity. Again, we look to buy and sell. We're looking to buy in this case only because we're looking for the internal liquidity to be taken out, okay, first. And then we have to trade away from the liquidity. All right. So all these formations can happen, right? You can also anticipate probably like a nice consolidation area right in here, probably something like this, right? Let's just do this so you guys can clearly see this. We can shape and mold this in any way, shape, or form so you guys can clearly see what I'm talking about, because it's very important, very vital for you guys to see with this. Okay, so something like this, right? If prices are like this, notice what's happening. There's internal liquidity, right? What do we see this? This is almost like a trend line. It's also a range, a consolidation period in the markets here, right? So this is all liquidity right here. What do we have to do to see before we take any trades? Well, we have to see the liquidity forming in the markets and then looking to mitigate and then push up. Okay, if you have any doubt in terms of how to trade, or at least where to look for buys or sells, right? Always depend on the break of structure first, and then wait for that liquidity to form in any way, shape, or form, the way those four liquidity formations that we've shown you guys, right? And then just wait for prices to mitigate. And then once you see that liquidity, now you can anticipate more easily to say, okay, well, we're going to look for buys here now, and then trade away from the liquidity, okay? Because we're going to use the power of this liquidity, right, this internal liquidity, to push prices higher, right? So without me blabbering more about on this diagram here, let me just go show you quickly, guys, on a live chart example. All right, so here we are on a live chart example here. We're on a 4-hour at this moment. Let's go start from this downtrend over here. Okay, so as you can see here, when prices are breaking structure like this, right, you can see that there was a low that was being broken here, right? And at this very low, there was a lot of liquidity forming in here. Okay, so this low has a lot of liquidity. Okay, and what do the banks do? They come down and take out this low liquidity. There was a lot of buyers that bought here. Now this liquidity was taken. Now what do we anticipate as traders? Well, we anticipate for prices to retrace back, right? And if they don't fully retrace back, there is a later move for the markets to come back and take out that liquidity. Okay, essentially what we're going to be doing is just following structure at this point. Okay, so let's look at this, for example. Okay, so on the higher time frames, we follow structure. Okay, we don't follow liquidity, we don't follow anything else. We just look at structure, being very simple and simplifying this for everyone. Okay, we look at structure. We see that there's a high, that there's a low here. Price has broken this low down here. Okay, we see that this high broke this low. Now let's go in here. Let's go here and cut this off here so we can see this, so you guys can see this. Okay. All right, once this has happened, right, notice here when prices are retracing, okay, what do you see in here? There's a lot of internal liquidity happening here, okay? You can see here that we have that trend liquidity. So there's a lot of liquidity sitting right there, which is an area where where the markets are interested in going, right? The smart money, the banks are very interested in going after, right? You can also see that right here, you can see there's double tops forming here. Okay, if my computer isn't acting up like this. Okay, there we go. All right, there's a lot of liquidity, internal liquidity in here. Okay, so now this tells us that when prices pushed bearish, right, and we were just able to take this external low here, there was a lot of buyers, right? You can see that this low here took out all this liquidity from this low here, and then used all this liquidity from the bottom side here. right there, right? Use this bottom move here to push prices up, okay? And essentially, when prices are pushing up, the banks are always trying to manipulate you. There's a lot of sellers here that are selling way too early, right? Essentially building, the banks are giving everyone a chance to build, to get into positions, to start buying and selling, to confuse everybody essentially right over here, to manipulate you. And then once that happens, there's so much liquidity that was being built for the markets to come and take you out and then mitigate this last position, this last high here, and then push bearish here. You can see over here, we weren't quite, banks mitigated this high, but they also broke this high just a little bit, okay? To grab liquidity from these highs here, from this high. Essentially, this was our our inducement, which we'll talk about later, right over there, and then it's actually mitigating this last order block at this high here, right over there. Okay, so there we go. Prices took out that inducement, which is, there's also liquidity in there as well. There's a lot of internal liquidity, and from here we can anticipate for prices to push bearish. Okay, let's look at the next move. Okay, when prices are breaking bearish like this, now a lot of people are so in a rush to look for entries in here, which obviously we don't advise to, right? You can play this bearish extension, right? Essentially looking to break, right, mitigate, break, mitigate. We'll look for another mitigation here. But if we zoom in here, I want you to see something. When you zoom in here, there's every break of structure has when there's a retracement happening, there's liquidity that was being formed already, right in here, like that. Okay, there's a break of structure. You can see all this internal liquidity. There's actually double tops here, can't really quite see. There's also more liquidity here, right? And then price came and mitigated this. It didn't quite, actually mitigated this high here, right over there. Okay, but let's continue. Let's go on the 4 hour and then play this, so you guys can see how liquidity will be forming, right? So far you see the 4 hour is bearish, right? There's no liquidity right now. Prices are just overextended. We need to give a chance for prices to push bullish like this, right? And whatever they do, they're going to start doing all this like this, right? And forming all this interesting liquidity. We can start anticipating that prices may come up to this area of supply here. Okay, right over here. And then we can also look for this this extreme high over here for prices to come and mitigate. Okay, so let's watch what happens here when prices are doing this. Okay, so you can see in here, we're not looking to trade down here because we're obviously from this high to this low. We're still in our discount level. We need to be in our premium, obviously, to be selling correctly here. But even so, here you can see that there's liquidity here. This was our last high that has happened in this, right over there, right? And this is our last low right over here, okay? So you can see there's a high, there's a low, and then what happened when prices retraced? Price created more liquidity, right? To essentially move prices to the downside, okay? So let's see if it happens. Okay, there we go. So prices move bearish, okay? Let's wait for another break of structure, which is just has happened. Okay, we notice how when prices are going towards the downside, that we're trading, that the market's going towards away from the liquidity, right? So there was liquidity that formed here, and now prices are going away from liquidity, essentially targeting the external liquidity at the lows here. Okay, our job as traders is just to find that liquidity and anticipate for prices to go in that same direction. Okay, we have another break of structure. As you can see here, prices are going bullish, and they're going bullish rather fast. Is there any internal liquidity here? Not that I see of at this point. I do see some over here, actually from this wick to this wick over here. Okay, so we would look for this last high over here to be mitigated. Okay, and then we would anticipate for prices to move down. Now, we're looking for more liquidity, though. This is rather bullish, and it's too strong, right? Just because there's some liquidity forming in here doesn't essentially, tiny little liquidity doesn't essentially mean prices will go bearish like this, right? But we're looking for more vivid liquidity you can clearly see in the markets, right? Here you can see it, right? There's a lot of it forming in here. Now, we can anticipate as traders to look for sells here, obviously, right? Let's go here on the 4 hour. And now what we would do is trade liquidity, we would trade towards away from liquidity, okay? We can see that prices are obviously way too low in the markets. Now we can see that we are the liquidity, right? You can see there's liquidity here. Come on, right there, okay? And now we can anticipate for this one of these supply zones here to be tapped, right? If prices ever get there, okay? So we're essentially in a bigger pool, in a bigger breakup structure. There's a big breakup structure, and all this liquidity right here has been forming, right? You can see that there's a range happening here. Not a range. Consolidation right there. Okay, right there. You can see that there is also your trend liquidity. There's your right there. There's your fairly looking double tops right there, right? You can also see that there are double tops too forming. There's liquidity everywhere, right? There's your trend liquidity, right? Prices have gone down from here, from here, from here. There were sellers that were looking to sell from here. They failed because they're following this trend, right? Prices went up against them and then took out everybody. And then it's going to mitigate one of those areas of supplies and then push prices bearish like this, right? So essentially, that's what's happening, guys. You just need to be patient and wait for liquidity to be building and recognize those patterns that we see in the markets all the time. Now, obviously, I want to say this here. The reason why we failed this trade here, right over here, is because we were already at the very extended part of the market, right? So from this high to this low, we are so bearish. We're in the discount area. We need to be, like I said, in the premium area where we can sell, right? And that's where we know the best trades happen, is in the premium when you're selling, okay? So yeah, we can also do this for the buys, obviously. If we go here, let's not go too far. Let me go here just to show you guys right over here. All right, let's see what we can see here. There is, prices are pushing bullish at every low and every high, right? We're always anticipating for prices to create liquidity. There's a break of structure there. I just picked up a random place, obviously, just to show you guys. Okay, whenever there's a break of structure, let's wait for that liquidity to be building. You can see that there's liquidities here, right? Prices are pushing bearish here and here. Let's go from here. You can see all this liquidity in here. Okay, this is one of our formations, right? You can also see that there's liquidity there, right? Once you identify all this liquidity, it's very important for you to obviously recognize where your demand is, and then just wait and anticipate for price to get there, like this, right? And you can see that prices have taken out all this liquidity here. Let's go down to the 30-minute. Right over here. Okay, yeah, look at this. You can see them. These relative double bottoms here. One right here, one right there. You can see a lot of buyers try to buy there, then it failed, and then it took them out. And then now this is where we look for buys, right? There's a last down move before the major move up goes up like this. You can see that there's lows here. Excuse me. Let's go here. This low was taken out, liquidity was taken out, this low's liquidity was taken out, right? So there were buyers buying here, buyers buying here, right? And they essentially failed because price was bearish here at this point in time. All right, let's continue from here, guys. You can see here we have another break of structure. Okay, let's look at another formation, right? Every time there's a break of structure, we just anticipate for liquidity to be taken. Okay, you can see there's liquidity in there, right? This is we're playing our lows and our highs. So there's our low, there's our high, there's a low, there's our high. This is too high for my liking, my taste, right there, because you can see that we're in the premium here. We need to be buying in the discount area. Although nothing's wrong sometimes it's not wrong to look for buys in here. It just depends on what you're looking for. You can see that the liquidity was taking here. Excuse me. Right there. I know it's becoming a longer video than it should be. Like this, okay? liquidity was taken. Here's your area to look for buys, and then as you can see, there's also more liquidity down here. As you can see, prices came down even lower here to take out this liquidity. Okay, this is our inducement in the market, so this would be inducement right there. Okay, and then you would look to buy that as soon as prices get there. Okay, essentially, we will never know where the best area to buy, right? I mean, you can always anticipate, right? Because every time there's a break of structure, we always have to anticipate as a trader that there's a low and a high, right? After there's a low and a high, we have to wait for price to retrace all the way back, right? And this is where all the manipulation starts happening internally. Okay, notice how there's external liquidity here, right here, where banks are taking out this money, right? There's a lot of sellers and buyers. You can also see that this is actually a form of consolidation as well, right there. Okay, so we have that consolidation area, which is liquidity from the highs and from the lows here. So there's a lot of manipulation happening essentially in this market. Okay, a lot of manipulation that just happened, and then there you go. Price breaks above, then comes and mitigates. Right after taking out all the buy side liquidity here, it took out all this buy side liquidity. Price came back and mitigated right here at the last low, right? Last low, last high, right there. Excuse me, I can't show you guys this. Okay, there's your low, right, and there's your high. So when prices broke above this, took out all the liquidity, came and mitigated and pushed prices up, right? Why? Now we're trading away from liquidity, right? We're trading with the direction and away from liquidity. So anyway, guys, I hope you guys learned a lot on this video, and in terms of how to trade liquidity, right? It's very important, very vital that you know how to do this, because if we follow these instructions, right, then we will not be in the wrong essentially in the wrong part of the market to trade. Okay, so please throw a smash thumbs on this video if you liked it. Please comment below and tell me what you liked about this video, or if you didn't like this video, right? And please subscribe to this channel, because we always put in free content for you guys. Until then, we'll see you next.